Are you torn between investing in cryptocurrency or the stock market? It's a question that many investors face as they try to decide which investment option is right for them. In this video, we will explore the pros and cons of each investment option to help you make an informed decision. Hello and welcome to Diuble Z. In this video where we will be discussing the age-old question of whether you should invest in cryptocurrency or the stock market. Both of these investment options have their advantages and disadvantages, and in this video, we will be weighing them against each other to help you make an informed decision. One of the biggest advantages of investing in the stock market is that it is a tried and tested investment option. It has been around for centuries, and it has proven to be a reliable investment option for those who are willing to do their research and invest wisely. Another advantage of investing in the stock market is that you have a variety of investment options to choose from. You can invest in blue-chip companies that have a track record of stable growth, or you can take a risk and invest in up-and-coming companies that have the potential for explosive growth. One of the biggest disadvantages is that the stock market is subject to market volatility. The value of your investments can fluctuate wildly based on market conditions, and it can be difficult to predict when the market will experience a downturn. Another disadvantage of investing in the stock market is that it can require a significant amount of time and research to find the right investments. You need to stay up to date on the latest news and trends in the market to make informed investment decisions. One of the biggest advantages of investing in cryptocurrency is that it is a decentralized investment option. This means that it is not subject to the same market forces as the stock market. The value of cryptocurrencies like Bitcoin and Ethereum is determined by supply and demand, rather than by market conditions. Another advantage of investing in cryptocurrency is that it can offer significant returns on investment. Cryptocurrencies are known for their volatility, and this can work to your advantage if you invest wisely. However, there are also some disadvantages to investing in cryptocurrency. One of the biggest disadvantages is that it is a relatively new investment option, and there is a lot of uncertainty surrounding it. Cryptocurrencies are not backed by any government or financial institution, which means that their value can be difficult to predict. Another disadvantage of investing in cryptocurrency is that it can be subject to hacking and fraud. There have been numerous instances of cryptocurrency exchanges being hacked, and investors losing their investments as a result. The stock market has a long history of generating strong returns for investors. Over the past century, the average annual return of the S&P 500 index, which tracks the performance of the 500 largest publicly traded companies in the US, has been around 10%. The stock market allows investors to diversify their portfolios across a wide range of companies, industries, and sectors. This helps to reduce the risk of losses due to the failure of individual companies or sectors. The stock market is highly liquid, meaning that investors can easily buy and sell their investments at any time. This allows investors to quickly respond to changing market conditions and to take advantage of investment opportunities. The stock market is subject to significant volatility, which means that the value of investments can fluctuate widely based on market conditions. This can make it difficult to predict investment returns and to plan for retirement or other long-term financial goals. Investing in the stock market can be expensive due to the fees charged by brokers and investment managers. These fees can eat into investment returns and reduce the overall profitability of an investment portfolio. The stock market can be complex and difficult to understand, especially for new investors. It requires a significant amount of research and analysis to identify the best investment opportunities and to manage a diversified investment portfolio. Cryptocurrencies have the potential to generate high returns on investment. Bitcoin, for example, has seen its value increase by over 400% in the past year. Cryptocurrencies are decentralized, which means that they are not subject to the same market forces as traditional investments. This can help to reduce the risk of losses due to market volatility or other external factors. Cryptocurrencies offer a high level of transparency, as all transactions are recorded on a public ledger called the blockchain. This helps to reduce the risk of fraud and corruption, and it allows investors to track their investments in real time. Cryptocurrencies are highly volatile, and their value can fluctuate widely based on market conditions. This makes it difficult to predict investment returns and to plan for long-term financial goals. Cryptocurrency exchanges and wallets are vulnerable to hacking and cyber attacks, which can result in the loss of investments. In fact, over $1 billion worth of cryptocurrencies were stolen in 2018 alone. Cryptocurrencies are not regulated by any government or financial institution, which means that their value and legality can be uncertain. This can make it difficult for investors to make informed investment decisions and to protect their investments. From 1926 to 2018, the average annual return of the S&P 500 index was 9.8%. Over the past decade, 2011 to 2021, the S&P 500 index has generated an average annual return of 16.4%. The CBOE Volatility Index, VIX, which measures the market's expectation of volatility based on S&P 500 index options, has averaged around 19 over the past 30 years. The largest single-day percentage drop in the history of the Dow Jones Industrial Average was on Black Monday, in 1987, when the index fell by 22.6%. The value of Bitcoin has increased by over 1,200% since April 2020. In 2020, the total market capitalization of cryptocurrencies reached over $2 trillion, up from $190 billion in 2019. In December 2017, the value of Bitcoin reached an all-time high of nearly $20,000. By December 2018, it had fallen to less than $4,000. The price of Dogecoin, a popular cryptocurrency, fell by over 50% in a single day in May 2021. As of September 2021, only a handful of countries, including Japan and Australia, have implemented clear regulations for cryptocurrencies. In 2018, the U.S. Securities and Exchange Commission, SEC, rejected several proposals for Bitcoin exchange-traded funds, ETFs, citing concerns about market manipulation and lack of regulation. So, which investment option is right for you? Well, it ultimately depends on your personal preferences and investment goals. If you are looking for a tried and tested investment option with a long track record of stability, then the stock market may be the right choice for you. However, if you are willing to take a risk and potentially earn significant returns, then cryptocurrency may be the right choice for you. Just remember that both of these investment options require research and informed decision-making. Don't invest more than you can afford to lose, and always keep an eye on market conditions and trends. Both cryptocurrency and the stock market have their advantages and disadvantages, and the decision to invest in one or the other ultimately depends on your personal preferences and investment goals. It is important to conduct thorough research and analysis before making any investment decisions, and to diversify your portfolio across a range of investment options to reduce risk. Based on the advantages and disadvantages of investing in cryptocurrency and the stock market, it is clear that both options have their strengths and weaknesses. If you are willing to take on higher risk for potentially higher returns, then cryptocurrency may be a viable investment option. However, the stock market may be a better choice, if you prefer a more stable and established investment option. Regardless of which option you choose, it is important to exercise caution and never invest more than you can afford to lose. Investing always carries a degree of risk, and it is important to have a long-term strategy and to stay informed about market conditions and trends. Investing in either cryptocurrency or the stock market can be a rewarding experience, but it's important to do your research and make informed decisions. By considering the advantages and disadvantages of each option and thinking carefully about your investment goals, you can find the right investment strategy that suits your needs. Thank you for watching, and we hope that this video has helped you make an informed decision about whether to invest in cryptocurrency or the stock market.